Hi, everyone. Hello again. I'm Sam Ahrens, co-founder and CTO of Modern Treasury. I'm also Modern Treasury's resident payments nerd. You're going to hear that a lot today. And as being a payment nerd, I really love FedNow. And so I'm really excited to welcome Tim Boike from the Federal Reserve to talk to us today. Please join me in welcoming him. Thank you,
Sam.
Good to see you.
Nice to be here.
All right. So just to set some context for the audience, we were here last year at Transfer, and I had the opportunity to interview your colleague, Connie Thine, who was at that point talking about the impending launch of FedNow that was months away at that point. I was hoping, Tim, first let's introduce yourself, but then also give us a quick update on FedNow and what it's been doing over the past year.
Yeah, happy to. I'm Tim Boike. I'm with the Federal Reserve Financial Services Group. So if you know anything about the Fed, there's this whole group in DC that helps manage monetary policy, GDP growth, things like that. That's not me. Don't ask me about interest rates. I get that question a lot, especially at a real estate conference I had last fall. Then there's the supervisory and the regulatory piece, right? So they manage oversight of the bank holding companies. And then what many people don't know is actually Fed Reserve Financial Services, too, right, is a very big part of the Fed. And within FRFS, that's the group that manages a lot of the payment volumes for ACH, check, wire, security settlement, things like that, to the tune of roughly 100 million transactions every day. Roughly $5.5 trillion, I believe, cleared on a daily basis.
Impressive.
So we know a little bit about transaction flows and transaction processing. So what I do, I have a small team. I sit side by side with the folks that are part of our customer relations team. They're the ones that manage the relationships with the financial institutions, the credit unions, the banks. My team actually manages the relationships with the non-banks, right? The innovative parties, the modern treasuries of the world, the large corporates, the trade groups, and their aspirations in terms of payments.
Wonderful. So FedNow.
Yes.
Launched in July of last year, right after our transfer conference. We've gotten a lot of banks on board, a lot more banks on the docket. Yeah. What else? What else can you give us in terms of FedNow and the progress we've made in the past year?
Yeah, so about roughly 10 months. I think we launched mid-July of last year, so 10 months under our belt, so to speak. We started with roughly 35 financial institutions, a handful of service providers. We've grown that. Last number I checked here before I left home was roughly 750 financial institutions now are live and active on the network. So all of which are receive capable today. Not all 750 are send enabled yet. We are working hard on that and trying to get them send enabled. So a lot of the larger financial institutions that are pretty common household names, they are both send and receive today. Some of the smaller ones, we are working with their core platform providers, those that may have brought them onto the Fed or manage that connectivity with the Fed. They are enabling send as we speak. So as we look at volume and usage, right, we'd love to see usage up more, and we're working hard on that. And we think that's going to come as we get more and more senders enabled. We're going to start to see a lot more volume on the network as well. So part of my job is to really create demand. Right? Create the opportunities where people want to come aboard, want to leverage some use cases that are very good for an instant payment type of environment. So creating awareness, doing a lot of evangelism, educating, that's generally my role.
Got it. I might be biased because I'm coming from the corporate perspective, the corporate service provider perspective. But to me, when I hear you say 750 banks live on the network can receive FedNow payments today, what I hear is the hard part's done. And it exists, and it's real, and it's growing. And so would it be a fair question to say, or would it be a fair statement to say, it's here, but now we have to have the wider industry of corporates catch up.
That's correct, right. And I think it's natural, right? So you really can't get corporates to look at it until you have a viable network. So we've constructed the network. We focused heavily initially on those financial institutions, those banks and credit unions, get them aboard, work with the service providers that are doing a lot of that interface work, like modern Treasury, between corporate and financial institution. And now we're primed and ready, right? We're ready to let the transaction volumes flow across the network, and we're starting to see that across a lot of different use cases.
Wonderful. So what are some of the things that, in this preparation that companies are doing? What are the specific things that maybe companies can do to prepare for FedNow, or at least get themselves ready for this idea that money can move 24/7, 365?
Right. Well, so it's a little bit different between maybe a financial institution and a corporate. There's some adjustments and changes, right? So we generally work with financial institutions only. Right. In cases where we'll work with a service provider as well. Those service providers have been certified on our network and are the ones that are really typically managing the core platform, DDA platforms for these smaller financial institutions. So in terms of banks and credit unions, they work with us directly, look to get certified, and we have an entire onboarding process that we take them through from A to Z, right? Once they get through that, they demonstrate that they can pass the thresholds of becoming certified, then they're allowed onto the network. For the corporates or the end users, right, that's a little bit different. So we advocate, and we've heard this across a number of large end users in the past, forming quick teams, quick strike teams, if you will, for lack of a better term. Sure. Those that are made up of the business side, some of the product management side, the risk management side, those on the technology and the operations groups, really coming together, coalescing, and really looking at where's the value, right? Value of instant payments for us, identifying the low-hanging fruit, determining what that potential roadmap might look like as you start to go up higher in the tree to find the fruit. That's where I think, where organizations can coalesce a little bit more, come up with, the costs of doing it, the business case of doing it, and then taking it off. Working with service providers like yourself, working with your preferred financial institutions, all very, very important. So it's usually, I would say probably roughly between a 3 to 9 month type of process. Sure. That generally corporations go through. Yeah,
I think that would kind of resonate with some of the things we're seeing. I just for the audience, I think one of the things we see the most, and Tim, you might see this a little bit on the bank side as well. This is where I think the bank implementation of FedNow and the corporate implementation of FedNow might be similar. So we see a lot of systems built on this idea of batch-based processes. Yeah. Things where you're queuing up items throughout the day, you're waiting till the end of the day, and then you're releasing, I guess. So there's a two-stage process, and it happens throughout the course of a business day. But as I mentioned in my keynote, that's going to go away. There is no such thing as a business day anymore. There's no such thing as business hours anymore. So I'm curious if you've seen potentially this, in that 3 to 9 months that you quoted, do you think a lot of that is batched to real time as something that companies and corporates specifically need to focus in on, because that might be the biggest hurdle in their way?
It absolutely is, right? So when you start discussing or talking about moving from a traditional workday, yeah, right, and moving to a more dynamic around-the-clock type of workday, there's a ton of, a ton of different issues that you got to resolve, right?
Right.
One of which, customer service. So, and these are the things that we've also worked with the financial institutions and given them a bit of guidance as to, something goes wrong, if a transaction gets declined at 3 a.m. on a Saturday night or Sunday morning, I should say, who are you going to call, right? So those are all definitely the things that you have to talk about. Heard this morning, right, from you regarding things around reconciliation. So impacts to payables and the receivables and how that's going to work together. It's not just one payment channel,
Yep.
It's multiple payment channels. So if you've got ACH volumes and wire volumes, that we heard Brian talk about in that last session, could be card volumes, right? If you're a merchant or if you're a retailer and you're accepting credit cards, now you got those receivables that you also have to manage. So the idea of reconciliation, and you touched on this earlier, extremely critical, extremely important for people to consider on the front end.
Yeah, I think we see that a lot. The reconciliation is just one of those problems that if you don't solve it from the very beginning or you don't have a really amazing handle on it, it wildly spins out of control. And you're right, with more different ways of sending payments, more ways of sending payments, it just kind of balloons out of control. So let's say, let's take that 3 to 9 month implementation time. Let's say a company is now integrated with FedNow. They're making FedNow payments. Let's talk more holistically. What are the downstream implications for businesses that make a lot of real-time payments? You touched on reconciliation, but perhaps others like tracking. What other things are possible now that FedNow is here and now that FedNow is available that we may not think about?
Right. So, when you start thinking about management of risk, I think those are really top of mind right now. Yep. We hear that a lot from the financial institutions and some of the corporations that we interact with. So, there are risk management, risk exposure types of considerations that you have to look at. I think there's a lot of things around making good decisions around which payment channel to use.
Yep.
There's nothing wrong with ACH. There's nothing wrong with wire. We sell those services. So we're not suggesting that instant payments is going to replace any of that. Instant payments really sits side by side with those. So whether it's a modern treasury or it's your financial institution, they should be providing the guidance, right, to corporations on which channel a corporation should use when moving payments back and forth. And a lot of that's just based on criteria, the functionality, the nature of the rail, but also where they want to make improvements, right? So if I'm a corporation, corporate treasurer, and I want to improve my receivables, then certainly trying to migrate as much volume over to instant payments is probably a good idea.
Yeah, that makes a lot of sense. Yeah, we've built at Modern Treasury a lot of these tools to help people choose the right routing for them. And every corporate has a different way of choosing, okay, I want to start with FedNow, but I want to fall back to ACH. But in some cases, they want to fall back to wire. It's more what you're saying, Tim, which is just, it's all about the choice and figuring out what's best for them.
Exactly.
One of the things that I'll say, and then I'll ask you about this, Tim, we at Modern Treasury, we always have this kind of saying where we say payment systems never die. I mean, we're all still at least writing paper checks, or I'm sure all of us have received a paper check recently at some point. And so we know what to do with these. And it's in addition to ACH, it's in addition to wires, but they don't go away. They're still with us. They're still being used. They find the niche that they're good at. And I think it just speaks to these systems are improving. The Federal Reserve recently asked for comments on expanding the FedWire hours to, what was it, 22 hours, 7 days a week?
Right.
365 days a year. Is that, you think, an example of these payment systems are changing and growing and expanding? And the Federal Reserve wants to see that in addition to all its other rails.
Yeah, it's, we received some pretty positive feedback around expanding wire hours, really primarily to keep up with what's happening globally, right? So American companies that might be interacting abroad, or those maybe abroad interacting with American companies, ensuring that we're not disadvantaged in any way. And being able to open up, wire transfer to a broader time frame than some of the traditional working hours of the day, that's all really, really important to us. We talked last night at dinner about the opportunity with expanding wire now. Potentially now you could close on a home on a weekend, right? And leverage, the wire transfer system to help do that, right, at different types of hours. So I think it just opens up more opportunity. A lot of the banks are very supportive, very much in favor of it. Corporations too, we've heard, are very much in favor of that as well. So we think that there's a good opportunity there. Encourage anyone that wants to or should respond to those comments. You can certainly go out to the government site and provide those input comments.
I think you're going to find a lot of practitioners in the audience who would agree with you. Just quick show of hands from the audience. How many people have been burned by a wire cutoff in your work?
Wow.
It's a lot. I mean, it's quite a bit. So yeah, for those of you online, a lot of people in the audience raise their hands. It's definitely something that I think is top of mind for people who use wires every day.
And we heard Brian, right, in that last session in the real estate space. Wire fraud is a real thing. You know, they're dealing with wire fraud and check fraud. So with expanded hours, I think we'll probably also find a renewed interest to look at, you know, risk mitigation solution providers. We'll be kind of coming back into that space and providing a bit more value too.
Yep. So speaking of wires, the FedWire is moving to the ISO 20022 format. You mentioned the expanded hours as a way to keep track, you know, keep pace with what the rest of the world is doing with their systems. I also see that in ISO. FedWire is moving to ISO to keep pace with the rest of the world. I'm curious, is there anything that corporates need to do to kind of prepare for FedWire becoming ISO? FedNow is already ISO. Is there something there that corporates need to prepare for, at least be aware of when they're thinking about these things?
Yeah, I think the key word that you used is awareness, right? So we ask the financial institutions to interact with us leveraging an ISO 20022 message schema. FedWire soon, March of 2025. Right now with FedNow, that's all ISO 20022 based as well. So as banks interact with us, they onboard their transactions onto our network. It's in a very defined message schema, and we process those transactions appropriately once they hit our network. How the banks and the corporate customers interact, that's a bit different, right? So whether they need to know what's available in the ISO spec, you know, I think being aware is a really good idea. The ISO field or the ISO capability, the message capability does allow for structured and unstructured data. So when you start talking about the value of remittance, reconciliation, things like that, if we can get suppliers and buyers to coalesce around where data sits, where data resides, and is truly passed from buyer to seller and bank to bank, then that's going to make the power of reconciliation even more better.
Yeah, it's going really from beyond a payment system to now a store of data and actually a driver for your business by helping reconciliation.
Exactly.
Is that fair?
It is.
Wonderful. We've talked a lot about AI at this conference, or at least I have on this stage. What other technologies do you see playing a part in FedNow's success?
Well, you know, certainly the ability to manage risk and risk exposure. Every financial institution and corporate treasury department is different, right? They all have their different tolerances for risk exposure. So certainly risk, management of risk from key providers, insight providers is absolutely top of mind. And that's critical. I think there are other technologies related to AI that you mentioned as well, and that kind of also feeds into the risk. Keep in mind, these are irrevocable payments, right? And the whole idea around irrevocability requires you to know your customer better. Intimately know what their habits are, their behaviors are, because in general, these payments aren't coming back. There might be opportunities where you could claw back a payment or two if the receiving bank is willing and wanting to cooperate, but generally, you know, once they're out the door, they're not coming back. So that requires the institutions to really kind of know who they're paying and verify who they're paying. So authentication technologies, validation technologies, I think that all very much is in line with what folks are looking at right now.
I want to touch on something you said about irrevocability. Mm-hmm. It seems like irrevocability is a great benefit to FedWire and FedNow, but for the receiver. And so I'm kind of curious, because FedNow is irrevocable, do you think of that as a strength of the system or potentially a weakness?
So this is a really interesting point. So if you follow payments.com, they had an article a couple of years ago that really spoke to kind of irrevocability being kind of a negative thing, right? And I think they had a statistic in there, something like upper 60% of corporations out there really didn't like the idea of instant payments because of the irrevocability component. I think the attitudes are changing a bit more there. The corporations that we've talked to recently, they love the idea of knowing payment sent, immediate confirmation, we know that they got it, we can move on, right? From a sender's perspective. From a receiver's perspective, there's a whole slew of use cases that it benefits people. So you think about the payroll space, right? So one of the big things around de-risking the payroll environment is making sure that the funding account is going to be funded with good funds, right? So right now there are some payroll service providers that are using ACH debit. And sometimes those ACH debits tend to come back, right? Maybe not fully funded. And then all of a sudden now the payroll service provider has made payroll for their client. Right. And now who's left holding the risk, right? It's the payroll service provider, because that payroll funding account something went wrong there. So the idea of having good funds, irrevocable funds is really attractive there. Brokerage industry too, right? So unfunded trades, a big deal. And some brokerage firms don't like the idea of, all of a sudden now I moved funds into my brokerage account, was given a little bit of grace, right? Because I'm a good standing brokerage client. Now all of a sudden the funds kind of go sideways, but yet my firm, my wealth management firm, made the trade. Right. So now they got to back out that trade, which is expensive for them. And it's highly wrought with exception processing and things like that. So I think the idea around irrevocability is starting to catch on a bit more, not only for the receivers, but also for the senders too. Got it.
I think one of the things we've noticed as well is that even if you have the power to revoke, that it's not really used that often. And I would, again, ask the audience, when was the last time, raise your hand if in the past 5 years you've issued a chargeback on your credit card. It's very few, less hands for the audience at home, much less hands than the people who got burned by wires. It's one of those things that we always say in conversations about, well, I can use my credit card, it's safer, I can always charge it back. But for a consumer to actually avail themselves of those protections, you saw it in the room, I think that is not seen that often. And when you look at systems like FedWire, you can't use it at all, you're just a little bit safer when you send. So it seems like we're already in an irrevocable payment system, even for the ones that are revocable, because we don't use it, invoke it that often.
I think part of it too, Sam, is some of the instant payment schemes that might be available here in the US, and I won't name names, but certainly they got a little bit of a black eye, sure, right? When it came to fraud and not being able to claw back funds if on a certain basis, right? So I think that's kind of that mystique, especially around the consumer space a bit more, where the person-to-person transfer, or maybe it's a person to a small business transfer, and maybe somebody got duped inappropriately, right? I think that's where kind of the mystique around irrevocability kind of took a hit. Sure. But I think it's coming back now, and I think people are seeing the value of irrevocability.
Yeah, and for sure in business to business, it's it's still solid as ever.
Yep.
So I kind of want to transition a little bit. We're talking about things that I think people have heard before, we've touched on before. I'd like to ask for your perspective on things maybe we're not thinking about. So for the biggest benefits of FedNow that we're not thinking about for banks and corporates alike, what would you say those are? Like, what are the things that we're not thinking about that FedNow can really bring to the table?
Yeah, I don't know. I think people are starting to realize the value of instant payments. Whether it's a FedNow solution or an RTP solution, I think that's starting to get a little bit more traction, right? So I don't know if it's people are just, I don't think it's an unawareness thing. I think it's maybe more undervaluing the opportunities around an instant payment, specifically around a FedNow payment. So, looking at where I can improve from a business or a corporate perspective, where I can improve my payables or receivables function, how can I maximize my cash positions, especially in this rate environment, from financial institution to financial institution. So I think we're just at the tip of the iceberg, really trying to find where those huge value propositions exist. And it's very much a copycat world. I spent a lot of time in the government sector, tolling authorities, state governments, large municipalities, talking with them as well. They are like insanely copycat, right? States know each other, know one another, they're peers. One state does one thing, state of Virginia, and then all of a sudden state of Florida, Oklahoma, and North Carolina, they're all kind of following along and doing something else, something similar. So being able to uncover those little golden nuggets, if you will, I think that's going to be the key to the future.
It seems like that's a pretty ripe golden nugget, is that government use of FedNow, because I can't think of a state agency that wouldn't want to get the funds out the door, make sure it was sent to the right place, and like you said before, make sure that the payment was confirmed as the sender. Is the Fed working on engaging governments more on educating them about FedNow and trying to push it and evangelize it as this is good for you? We are
in a number of different environments. We've worked with a number of payment platform providers that typically serve the government space. So things like disaster recovery. I've gotten really smart about that, by the way. So, if FEMA declares a certain disaster area, for example, Florida, due to a hurricane or something like that, they don't issue funds direct, they issue funds to the state, right? And the state then leverages a payments platform provider then to move funds through what they term as grants to certain hard-hit areas. So that's just one use case, right, for that governments are looking at. Social welfare programs are really big too, right? So child care support payments and things like that, very, very popular. Tolling authorities starting to ramp up. We're starting to get a lot more interest from tolling authorities across the country, being able to top off Easy Pass accounts, or if you don't have an Easy Pass account and they catch your license plate going through a bridge, they'll debit or they'll dun you for the monies, right? You'll get a letter in the mail. So being able to respond to that letter and make an instant payment very, very quickly. Definitely are use cases that the government space is looking at.
Yeah, we're looking forward to more of that in public life. And just to wrap this up here, Tim, just as we have a little bit of time left, what is the one thing that the audience should know, corporates should know about FedNow?
Yeah. So we heard this morning from Sam and Dimitri and Matt, the demand is there. So I don't think it's a question of if instant payments is going to catch on, it's when, right? And it's for the corporates that are in the room, I think understanding kind of your market segment, where you think you and your competitors are going to take off. I would think that you would want to be on the front end of that, right? So looking at opportunities where you can kind of be on the front end, guide your customers, get them to think more critically about how they process payments and how they look at payment channels and how they're leveraging payment channels is going to be a big thing. Versus being on the back end and having to respond to demand and defend your market segmentation and your turf, so to speak. So working with companies like Modern Treasury, I think, is going to be critical. Talking to your financial institutions is also going to be critical.
Wonderful. Well, thank you, Tim, for joining us today, and really appreciate you taking the time.
Thank you for having me.